Hey everyone, last year I did a thorough study on the opportunities in the electronic sector of India. In that study, I identified top EMS companies that can benefit from the sunrise sector in India. And one of the company was Avalon Technologies. Just to give you an idea, Avalon launched its IPO last year in April 23 at a price of 436 rupee. In the next few months, its share price zoomed to levels of 700 rupee. But then the share corrected to touch a low of 450 rupee. I remember covering Avalon in August 23 when it was trading at levels of around 480. And it's been around 6 months, the share is still hovering and consolidating in the similar range. Now on one side, EMS companies like Kaynes, Dixon are growing big time. Avalon Technology has been struggling. The question is why? So I went through the latest con call of the company post its Q3 results to understand the current state of the company and its future growth prospect in the near term as well as in the long term. Hence sharing my knowledge with you all in an unbiased manner. Again, it's not a buy or sell call. The idea is to empower you all with the knowledge so that you can do your further study and then take a call regarding what to do with the company. Alright, let's get started. To begin with, let me just give you a brief overview of Avalon Technologies. So, company was established in 1999 with headquartered in Chennai. It's a fully integrated EMS company that include printed circuit board design to complete electronic system also known as build box. Again, if you want to understand the business model in detail, you can explore my previous video. Avalon has its presence across clean energy that includes solar, EV, hydrogen, then mobility that include railway, automotive, aerospace, then industrial, communication and medical. In terms of revenue breakup, clean energy contributed 25% in FY23 sale, mobility contributed 21%, industrial 29%, communication 11% and medical and others 13%. Now Avalon operates on a hybrid model with manufacturing facility in both US and in India. In a way, it is good for the business because their strong presence in the US helps them win orders and expand their market. On the other hand, companies' Indian manufacturing help them optimize the cost as well as ride the EMS growth story in India. Now historically, this hybrid model was an advantage for the company, but it has exposed Avalon to the current slowdown in the US market. In fact, today there's a remarkable difference in India and US where on one side, Indian EMS market is growing leaps and bounds, US EMS market is currently facing slowdown. And that is the reason it has impacted Avalon's 9 months of FY24 performance. While company did a sale of 945 crore in FY23, in 9 months of FY24, company sales stood at 650 crore. And company's FY23 EBITDA stood at 113 crore. Whereas in 9 months of FY24, this EBITDA has significantly fallen to 45 crore. This is mainly due to operating deleverage where companies' margins have fallen from 12% in FY23 to 6 to 7%. Operating deleverage essentially means companies incurring higher fixed cost but due to lower sales realization, companies' margins have been impacted that has resulted in lower EBITDA and profits. So if you look at company's PE ratio, it would look very high today at a PE of 75. But it's mainly because of operating deleverage. Eventually, when things come back on track, its margins would improve and so does its profit. So PE of 75 would not be a right criteria to look at company's valuation and say that Avalon is expensive. A lot of people make this mistake of just looking at PE and think that high PE means overvalued and low PE means undervalued. You need to look at future potential and impact of margins and the profitability. Now coming to company's FY24 performance, if you recall, during the beginning of FY24, Avalon's management has guided for 25 to 30% growth in FY24 and EBITDA touching 12 to 13%. As a result, company's share price also zoomed to levels of around 700. However, they failed to anticipate the impact of the slowdown in the US. Later in August 23, they revised their guidance to 15 to 25% and as a result, company's share price also tanked. And now that we are in Q4 of FY24, management in their latest con call has guided for degrowth of 8 to 10% in FY24. If you revisit my last video on Avalon, I clearly mentioned that slowdown in the US is the biggest threat in its growth thesis in the near term. But I was expecting slowdown in growth based on management guidance. Definitely I was not expecting negative growth in FY24. Clearly management got completely wrong with their assumptions for FY24. However, I've been tracking all their con calls and one thing has consistently come out of it. Management has been very confident of their capabilities and consistently reiterating that long-term prospects for the company are very bright. In fact, if you look at Avalon's India versus US business separately, Indian business has grown around 12% year on year in Q3 of FY24, whereas US business has degrown. Interestingly, if you look at Avalon's business mix, it was predominantly a US focused company with 70% business coming from export 3 years back and only 30% from India. However, Avalon is consistently increasing its business in India. That has resulted in around 47% business from India today and 53% from export. Management has mentioned that they were late entrant in the Indian market but seeing good resurgence in India. So their growth story in India is beginning now. In the long term, company intend to do 85% business from India and 15% from US. Especially in the Indian market, one of the biggest opportunity for Avalon is in railway. For example, one of Avalon's customer has got the approval for Kavach program where they are jointly working. So Kavach is basically an automatic rail protection system that helps in avoiding train collision. And some of their customers have got orders for Vande Bharat as well. They also see good demand in industrial EV and energy segment in India. On the US business, management mentioned that they are expecting recovery in H1 of FY25 and gain traction in the second half of 25. Management further said that it is essential not to lose sight of long-term vision and opportunities while dealing with short-term challenges. We are preparing our organization for years of growth ahead. Avalon stands strong, navigating adversity with resilience and focus on building a business of profitable growth in the long term rather than growth at any cost in the short term. As far as order book is concerned, as of December 23, company has an order book of 1,275 crore with an executable timeline of 12 to 14 months. Additionally, company has long-term contract worth 843 crore to be executed over the next 2 to 3 years. So overall, I buy their point that while FY24 was very difficult, especially from US business perspective, FY25 is looking very promising. And I always say that you will never get good price and good news together. You get good price only when the news is bad, and vice versa, when the news is bad, the price already touches the roof. So for now, I am keeping my faith in the company. Although I'm not expecting a great Q4 either, but considering FY25 and beyond and the correction that has happened, I would say that you can either hold Avalon if you already have it in your portfolio or if you don't have it. And if you want to write the EMS story, you can probably consider to add it in a systematic manner. And of course, it's important to keep a close eye on each quarter of FY25 and then take a call on whether to increase or decrease the stake. If you look at its shareholding pattern, promoter holding got reduced during June 23 as a part of IPO process where FIs and DIs added stake in the company. Since then, promoter holding has slightly reduced, but DIs have recently added stake in the company. FI holding has also reduced in December quarter, but if you expand it, Goldman Sachs is actually increasing stake in the company. Within DI, it includes names like Nippon Small Cap, SDFC Large and Mid, SDFC Focus 30 and Edelweiss Balanced Advantage. Although overall public holding has increased in December quarter, but there are a few HNIs that are holding their stake in the company that also gives a good confidence. Now I don't want to stress this video further. I've tried to share whatever knowledge I have gained from Avalon's latest con call. Going forward, I'll keep a close eye. And like I said in one of my posts, I'm doing a lot of research and there are many informative videos in the pipeline. So if you're inclined towards personal finance investment, you can consider subscribing to this channel. And if you find this video useful, do share it with your friends. I also have a weekly video series where I share one exclusive video every week that include important government announcement and sectors and stocks that would benefit from it, along with quarter results, key updates from my tracking list of more than 300 companies, and many more investment ideas along with my own portfolio detail. You can explore the details on my website. I'll see you next video. Till then, take care and also let me know in the comments if you want me to cover any specific company.